All right, so what we want to do here is we're going to go over basic charting, some analysis, how we look at the market. What we do, the first thing I'm going to do here is we're going to take a triple screen approach, which is very common. If you understand trading, most guys will look at 3 separate time frames. That's kind of the most common methodology. Dave looks at more just because Dave's, obviously functions at a higher level than most, so he's able to analyze multiple things at one time. But for newbies, it's important to understand. So the way you look at it is you always start with your prevailing chart. Now, your prevailing chart is always going to be your largest time frame. So in this particular case, if you're dealing in, I always use the rule of 6 is roughly what I use. So if I'm looking at a 1 minute for entry, 5 minutes my primary chart, 30 minute is going to be my prevailing trend. So here's a 30-minute chart. What I'm going to be looking for here is I'm going to be looking for key areas for both support as well as resistance. So you can see the very first thing I'm going to do is, and remember, support and resistance is a zone. It's not necessarily an exact price and time, but you can see right through here, here's our current support level. So we are sitting at support on our charts, okay? Well, when that was support, what you'll notice, I'm going to go ahead and delete this line. This area here had acted as a resistance point, which when it was up there, we had resistance up in this range. So the very first thing I'm going to do is I'm going to break down my chart, and you'll notice you kind of have this midpoint, you have this low, and you have this high. So this is our range for our chart. You may want to zoom out just to see how those levels kind of tie into other things. And you can see if we drag this back all the way to here, you can see how those levels kind of played in. You can see how you can drag back to here, see how those levels played in. And then this one, we're going to go ahead and move these ones now that I can kind of see back a little bit further. We're going to drag that up just a little bit here. So you can see how those levels played in right through there. So there is our current basic zones there, if you want to call it that. Once I have that on my prevailing chart, I don't need to come back to this chart anymore. I'm done with the 30-minute. So then I'll come into the 5. And just to kind of reiterate my levels again, I'm going to look at it and say, okay, yep, levels look pretty accurate. This is a good risk to reward scenario. If I were to buy here, anticipating this being my range, you can see I've got a lot more upside than downside, so that would be something I would look at. Now, if we are to pull fibs, this is the chart that I'm going to pull fibs on. So in looking at this, I'm going to pull basically what I identify as my pivot from the top of my box to the current low. I'm not going to pull to here. I'm not going to pull to here. I need to pull the whole time frame of my 30-minute chart, or what I anticipate my support and resistance areas off my 30-minute chart. So I'm going to pull from this level here to that high. So you can see how that's a 50% retracement there in price. Here's a 38. So depending on if this low holds, we could see a retracement back up into this level. Okay. Now, as you can see now, we're seeing some selling still going on back into our zone. So we have not seen a turn yet on a 5-minute. Now, the 5-minute is where we primarily get most of our data. Okay. Now, as it relates to reading and understanding candles, I'm going to delete my fibs off here for now, just because I don't want to clog up the chart with too much stuff. Now, if you understand reading candlesticks, the very first thing we're going to do as it relates to candlesticks, and I'm going to delete some of these boxes off here too. I'll put them back on when we wrap this all up and we tie this all in. But, and just so you guys are aware too, I shut my system off, but this was a short right here. So in doing these calls, that happens where we miss trades, but this was our short right there. That's what we're looking for a short. Now, as it relates to candlesticks, what we look for in candles, I'm going to go ahead and blow these up because I want you guys to be able to see how we read and interpret candles. I don't care what candles are called, okay? I know a lot of guys care about the names, right? I know Steve Neeson. I've traded with Steve Neeson. He's an awful trader, and I would tell that to his face. I've sat there and watched him trade candles and take 11 losing trades in a row. Okay, so the first thing we always want to do is we want to compare the last two candles to each other. Remember what a trend is. By definition, it's a series of higher highs and higher lows. So the very first thing we're going to do is we're going to identify this high to this high, this low to this low. Very first thing we're going to do is just do that, right? So you can see, as it relates to trend, we have lower highs and lower lows. Now, the other thing that we want to consider is the midpoint of those candles. So if the low here was 89 and the high here was, let me see what that price is. The high here was 07. So we know we have a range from 89. So let's take this, 5007 minus 4989. 18 points. So we would be, our midpoint is going to be 18 points higher than 89. Now this is important to know. 5007 is our midpoint. Oops, sorry, 9 points, sorry. Well, the whole range is 18. So 4989 plus 9, 4998. So right there is our midpoint. And you can generally eyeball it and get a pretty good idea. That's the midpoint of that previous candle right there. Now, if we take this range here and we look at its midpoint, what you're going to find is you're going to find that its midpoint is going to be somewhere in that range. So in looking at this candle versus this candle, you can see you have lower highs, lower lows, and it's trading at the below the midpoint of current and below the midpoint of previous. This is a pivot by definition. That's one of the very first things we look for when we're looking at this price action is what's the trend of this particular chart. If I'm looking at a 5-minute, if I'm looking at this chart here, even though we're coming into support, we still have lower highs and lower lows on our chart. So think of it like confidence. We currently see that the market is losing confidence in the price of crude. Okay, something very, very important to look at there. Now, as it relates to what you guys saw in the room, is Dave has the ability to look at linear regression, and then he does it's a standard deviation off of linear regression. So now, if we're comparing, let's go ahead and compare now these two current candles to each other. So here's our current candle, right? We're testing the lows of current and the lows of previous. We've just broken it. So now we have lower highs and lower lows compared to the previous candle. So this would be an impulse from the previous pivot. Our current midpoint on our previous candle is there. Our current midpoint on this candle is there. So we want to see how this candle trades and closes in relationship to its midpoint. If it starts closing up into the wick here, this could be the potential reversal sign like this. If you look at this particular candle, you had a higher low, equal high, but it traded above its midpoint and above the midpoint of previous. So we're always comparing our current midpoints to each other. This would have to trade all the way back up here in this current candle to be a signal for potential buy on a 5-minute chart. It's not going to happen in this candle. Okay, even though we are coming into some support, it's going to take an additional few minutes for this to wash itself out and then give us a trade. Now, what we look for then, once we've identified these ranges, and I'm just going to go ahead and go to a 1-minute chart now. Go to our 1 minute. There you go. So this is the low of that time frame. This is this here is that 5-minute candle. This here is this 5-minute candle. So what we look for now is we need to start seeing how price interacts with these highs versus these lows. And we want to see that this low holds. This right here, if it closes right here, would be a first signal, which would not be a trade. We would wait for our second trigger. And then we also look at where's this trading in relationship to our standard deviation and Bollinger Band. So I'll give you an example. Let's say I were to look at this trade right now. Let's say I were to take this trade at 86. Okay? We would know our stop would be placed at 76. So I'd be risking 10 at 86, which is where it was just a second ago. And we know that the highs of that previous candle would be back up here at 5,001. So what do I stand to make? I'm risking 10 to make 15. Good risk to reward ratio, good trigger, but we still have to see this correlation change on our 5-minute chart, which we have not seen yet. So if we look at this candle here, we're going to take, that's the high of that candle, that's the low of that candle. That's basically the midpoint, 83. So we need to see how this is going to interact with those 83s. Look at this. This thing's coming all the way back up to those highs there at 90. This could be a pretty good indication that we're seeing a turn here on the 1-minute chart. So we liked it at 86. Let's see how it interacts. You're gonna see this candle have to work itself out over the next 6 minutes, though. So we want to see how this price action is going to work itself out over the next 6 minutes. On a short-term chart, just to give you kind of an idea, you can see how this had been a previous and established low here. And when that was the low, it came back up into this level as a high. So that's a pretty good indication. We're currently in this short-term little range right there. Short-term little range. Now, if I were to have taken the trade at 86, I would have had a stop below 76. Once this is now traded, you can see these tails. And you always base your stops on a 5-minute chart. You never base them on a 1. So your stop would be down here below these lows. Your profit target would be somewhere up in this range. Okay, seeing how this price action works itself out. Now let's take into consideration these candles. So there's the low. We've now started our new 5-minute candle. So we want to see how this candle is going to interact. But there's our high. We want to see this candle put in a higher low here. Okay, and it's already put in a higher high. Now we want to see where this candle closes into relationship to its previous midpoint, which was there, maybe a little bit lower, maybe one tick lower there, and then midpoint of its current candle. You can see now we're trading near the lows there. That's why I said we got to see this work out. So this back half, this candle is going to be crucial to see how this thing trades over the next few minutes. So you can see how we're pretty much, we've engulfed the whole previous body here. So what this indicates is this indicates impulse versus corrective waves. So an impulse is when you see price action trading outside of themselves. So you can see how it traded outside of itself. The body's traded outside of itself. Body traded outside of itself. And then you'll notice how price trades within itself here. This is a corrective wave. Then you can see how it impulsed down, corrective wave against it, impulses down, corrective wave against it, impulses down, corrective wave. This trend is still in a downtrend relative to our 5-minute chart. Now, the reason why you're seeing this down in these zones is because we're actually getting into where our larger, longer-term traders yes, you have to wait until the candle finishes to determine its midpoint. Absolutely, 100%. But all I'm doing when I'm drawing these candles here is I'm just following along with it. But you absolutely wait. You do not jump the gun. See, if we would have jumped the gun on this, look at where we are now. We've now taken out that previous low. We've put in a lower low than that previous low. If we look at this here, you can see, and we're trading at the lows of current and the lows of previous. So that's why we did not take a trade relative to this candle on a 5-minute, because we had lower lows, lower highs, and we were trading at the highs of current, midpoint of previous, right? So now on this current candle, we're trading at the lows of current, lows of previous, and we're below both of its midpoints. This would be an impulse back down to the downside. We would see this come down here and retest some of these lows in this current trade, anticipating that it's probably going to break it. So you can see impulse, corrective wave. Now we're starting to see an impulse back down. Now we would trade this against the 1 minute, so we would come into here on a 1 minute. Our signal for a short was right here. Now, I don't trade when we do these training calls, but I tell you right now, I would have caught that trade. But notice, this is actually our initial trade was right there. But you guys can see, this was the same methodology we were following when I caught this short right here. We got short right there. And then we had this impulse. We made 10 there, even though we knew we were most likely going to make more. So you can see in relationship to these lows, let's see how this candle's closing now. Notice how all these wicks are starting to form down here. We know we have bids down here. People are buying. So, but we cannot buy in this candle. We have to wait for this next 5-minute bar to form and finish, because we have to see a higher low, higher highs, and we have to see where it trades in relationship to its midpoint. Okay, so we're going to remove our previous candle because now we have a new candle forming. So if our high was right here at 93 and our low is here at 75, that's going to put our midpoint at somewhere right around there. So we're going to remove this midpoint because here's our current candle. We need to see how this price action is going to trade in relationship to this. Now you can see, let's take our current candle. We currently have lower highs, and you currently can see that price is trading at the low of its current as well as the low of the previous candle. This is going to take out this low. You're going to see this low break. See how heavy the market is? Lower highs, lower lows, trading at the lows of current and previous. Oh, look at that. Had some buyer swoop in. So then what we want to see here is go to a 1 minute. How the volume was. Not great. So we got to see how price is going to interact with this 75 here. Low risk trade though, if you guys realize, if we were to take a trade here, let's say I were just to willy-nilly take a trade here at 77, I'm only risking 3 points. Even though I still think this is going to break, I'm still only risking 3 points. But you never want to try to catch bottoms, because bottoms are the hardest things to catch. We want to see more confirmation. So realistically, we're only 1 minute into this candle. We need to see how the next 4 minutes play out relative to our primary chart of our 5 minutes. We need to see how this high interacts, and this low interacts over the next 4 minutes. 3 minutes now, because now we're still trying to hold those levels. But overall, you have lower highs and lower lows. And you've still got a trend that's down even on a 5-minute chart. So if we were to look at this current candle and compare the two, there's both of our support for this current candle. You can see how we're trading at the midpoint of previous, lows of current. So this is still a bearish move. We would still anticipate this to break. Now, where you start seeing accelerated momentum is when price action takes out these longer breaks. So let's go back to our 30-minute chart. If this level breaks on our 30-minute chart, if this low, which is another 16 points lower, if it takes out those lows, you're going to see this thing accelerate to the downside. That's where that momentum, see right here, see where this low was? See when this thing broke, you had this major acceleration to the downside. That's what happens. As you see that major selling off going on. So we want to see how this is going to interact with these lows. So let's go back to our 5 minute. This is why I don't get caught up in the names of the candles. It really doesn't matter to me. So here's our high. Oh, look at that. See, we may have some buyers down here, right? Because we did trade below that, or we traded right to that level, and we found a bid. People started buying. So this is our current midpoint. Let's see. Remember, we got to see how this candle's going to finish in the next 5 minutes. There's the high. Based on current price action, there's the midpoint of our current candle. This is the midpoint of previous. We need to see how these interact with each other. Really, we're still 5 minutes away from a trade because I have to see higher low, right? By definition, what's a trend? Higher highs and higher lows. So I have to see my next candle here put in higher highs and higher lows for it to bottom. Now, what we have the ability to do here, so here's our current candle. Here's our previous range there. When this prints a new candle here, we're going to see how that 5 minute played out. Almost done with this candle. There we go. So we traded above the midpoint. So current candle, this would be our low. That would be our high. We want to see how these candles close in relationship. So we still have 4 minutes before we could even consider possibly looking for a trade on this candle. And what we need to see is a change in trend. Higher highs, higher lows, trading at the highs of current, highs of previous, or above the midpoints. So normally what I do is when I teach this, I'll literally have people just draw boxes just like I showed you there. So what we're going to do is we're just going to keep our current box open because we don't know our previous yet, or our next one. This is why we didn't get too excited thinking this thing was going to turn here, even though we currently have higher lows and higher highs on our current candle relative to our previous, because look where we're trading. Trading at the midpoint of previous and the lows of current. So this is where you get kind of chop-sawed along, is as these markets start to turn. But you know, as a trader right now, you don't have a trade for the next 5 minutes. You're just waiting. You are just waiting. So go ahead and type in the question box if you've got questions. We know we don't have a trade for just a minute here, so we're just going to follow this along. Now, getting into the material real quick, those that have the content, we're going to pull up the manual real quick. We're going to go through it. Week 1, really all we're focusing on is charting basic types of traders, so we're just going to do a little brief review on that real quickly. So a lot of this is just basic market basics. Types of traders, let's just review this real quickly. High frequency, fractions of sections, real short-term trades. Scalpers, think in terms of minutes. Always remember that. When you're a scalper, you think in terms of minutes in trades. Day traders, think in terms of hours. Swing traders, think in terms of days. Position traders, think in terms of months. And investors, think in terms of years. So this is kind of a basic breakdown of where you fall in. We do some high frequency stuff just because you can see trades. Some of the trades we're in are in a few seconds. So we do have systems there. But the majority of our stuff is going to be in this range right here, between days to hours. Or, excuse me, minutes to hours. So just a basic breakdown of that. Weekly routine. Let's make sure we just kind of cover that. What we do when we do a weekly routine is just get a feel for what we anticipate the market's doing for the week. So let me go to here real quickly. We're going to pull up Forex Factory. So I normally do this on Sundays. I'm just going to look at kind of what we're anticipating for the next week to look like. I got a question here. Let's see what the question is. You do look at the great question, Lewis. You do look at the body of the candle, but what you're looking for is actually how the close is in relationship to the previous. So let's go over that real quickly. So if this is our current candle right here, so let's say this candle stops forming. Let's just double check the lows. See how we're maintaining these lows here for both of these candles? So there's our low. Now, if you look at it and you say, okay, well, relative to that high and that low, my midpoint is right there. So you can see we're currently trading at the midpoint of current, or slightly above the midpoint of current and above the midpoint of previous, with a higher high and higher low. This could be an indication here, depending on how this prints. We could start to see this trend change because we're not seeing an impulse. So that's why you always wait for those 5 minutes, is to get a feel for, okay, is this market starting to turn relative to the fact that we've not been able to break these lows yet. So let's go to a 1 minute. Okay, so we should have now a new candle printed here on a 5 minute chart. So now we know there's our high, there's our low. This should break this previous high now. We failed to take out this low. We closed above both of the midpoints here. Now we would start looking for this to start to move higher, because we have a relationship of above the highs and above the lows. Now we would do the same thing now on a 1 minute. We would then come in here and say, and I actually like this as a trade. So we're going to remove horizontal line, horizontal line. Let's see how these stops interfere or look in relationship to our trade here. So we're actually in a position. We're going to display fills. We're long at 80, realizing that our stop in this particular case is just going to be below these lows. So we're not risking a ton here with this particular trade. And we've had a lot of support down in this level. So we're going to adjust our stop to, we may just take this back off. We're seeing too much weakness here. See how this interacts. There it goes. Just broke. That's not what we were expecting there. Out of a trade. So let's get back to that, because that's important for you guys to see. We thought we were seeing a bottom there. We jumped the gun a little bit. Look what happened when it broke that with volume. Couldn't get to my stop fast enough. I was trying to do too much here. But there's that impulse. We were seeing a potential pivot reversal here, and it failed. So let's go back to a 1 minute here. So we were long there thinking that this one was going to break higher, and it failed. Pretty good volume too. See the big volume bar there? And it happened in one print. So let's go back and look at this chart. So you can see when it took out those lows, see the velocity of that trade? I was trying to get my stop right below those lows there, and it just wasn't. That was a manual trade. That was not a systems trade. I thought we were going to see more of a bounce there. So let's see there. This is our new resistance. There's current resistance there. This is why I never trade when I'm in training here. We had the right idea, we just were the wrong direction. Thinking that this support level was going to hold because it had held previously. So now if we're comparing candles, there's that There's that. There's that low. There's that low. That literally swooshed in one print. A lot of sellers down there. So there's our current candle right there. Any other questions? All right, this video will be posted within about an hour. So I'll have Dave turn the room back on. So we'll see you guys back in the live trading room.